Thursday 21st of March, and this is a dollar index chart. So obviously we've been trading sideways for a very long time in the US dollar, which has been driving me mental and driving a lot of traders mental. Yesterday we collapsed on the Fed minutes as the Fed said they will not be raising rates, and I think they said something along the lines of they won't be raising rates this year. Anyway, dollar collapsed to test what is important support at the trend line, which goes back to September, the 200-day moving average, which is this red line here. And as you can see, even the lower Bollinger Band, as you can see, we held that and we have bounced. According to this chart, we're now trading up at 95.90, so off the low of 95.75, which is pretty much exactly at this support level. So this is definitely key. We've got the 200-day moving average at 95.85 on the dollar index. 95.80 is the trend line, so a break below 95.70 should confirm a break of this pattern and should be a significant sell signal, despite the fact that we're already heading into oversold territory. Let's just check the weekly chart. Okay, same story for obvious reasons. Weekly 200-week moving average as well as the 200-day moving average, which is unusual. 95.90 is the 200-week moving average. So a lot of support here. It would certainly be tempting to buy it this morning and see if we do bounce off this important support level in oversold conditions. But as you can see, one way or another, this is going to be absolutely key. Either we bounce off it and have a good run, probably back up to 96.00, 96.40, or the break lower would be the sell signal. A weekly close below here tomorrow night would help to confirm the sell signal. I'm just going to add this trend line from the late low in January to the late low in February. Give us some further resistance around 96.35. So 96.35, 96.40 would be your first resistance on any bounce in the dollar index, and then we'd have to get through that 100-day moving average at 96.54, which, as you can see, did have an effect on the way down. It certainly did manage to offer some good support until we collapsed. Shorts in the Aussie dollar did not work yesterday. I thought that the break below 70.75 would be a sell signal, but we only got to 70.54 and then we bounced back very strongly, so that did not work. We're now through the trend line. I don't see this anything particularly meaningful. This is pretty much just a sideways trend. Obviously we should have resistance at 71.60 from the 100-day moving average, although that didn't work in late February, so I wouldn't rely on it. Maybe we can get up to more important resistance at 71.95 from a longer term trend line, coupled with the 200-day moving average at 72.16. Okay, that is a 20 pip range, so it's not particularly easy to trade. That's all I can say on this pair. Really sit in your hands and wait as far as I'm concerned. New Zealand dollar obviously stronger against the US dollar as we break a couple of resistance levels. Well, we certainly broke this short-term level. It's only a month and a half old. Looks like we spiked above it, dropped back, and then used it as support. I wasn't awake during this time being in Thailand, but that seems to be what's happened. Now, we're tackling this trend line that goes back to June 18, which is more important, but we seem to be breaking through it. So it all looks positive on the daily chart, but then when you look at the weekly chart, you see that we have run into the 200-week moving average at 69.33, and the high is 69.33 as I speak. So this is obviously key. Do we hold that and do we go back below the trend line at 69.20? Just let me see if it's the same value on the daily chart. Sometimes they don't line up perfectly. 69.15 it is. So 69.15, 69.20 is what you want to watch on the downside, and obviously 69.33 is what you want to watch on the upside. We will need a decent break above 69.33. I tell you what, the high of the year set in February is 69.41. So if we start holding above there, that should be very bullish, and we should shoot up to 69.80 at least. What's this high here? 69.70. Okay, 69.70, 69.80 will be the target on a break above 69.40. Yes, it's only 30 pips, but there you go. So yeah, that's what you. If you want to try a short around 69.20, 69.30, it may not be a bad idea. It's worth a try. You can stop at say 69.45. And then you'll want to be buying back on a dip to 69.30, 69.20 for a move up to 69.70, 69.80. Tricky. You're going to have to be nimble. You're going to have to sit in front of the screen and work that one. But that is my suggestion for the New Zealand dollar versus the US dollar. Actually, just to recap, we were selling at 65.70. We were selling at 68, 65.70 this week, and those trades did work. In fact, they worked quite well, even better yesterday, because we dipped as far as 68.26. So there was maybe 40 pips profit in that trade. If you up to 40 pips profit in that trade, if you did that, if you tried that short position before the Fed minutes, obviously on the Fed minutes we rocketed. But look how well that trend line worked. Because once we did shoot up through it, we came back to test it. So if you were just trading this pair alone, just on that trend line, that would have worked really, really well. You could have bought back in on the dump to the support level and then seen it rocket up to the 69.33, which, as you remember, is the 200-week moving average. Dollar yen's dumped, broke the trend line, this little trend line that goes back to the early part of February, and the moving average resistance was left behind. We've got a little bit of support around the sort of 110.45-35 area, lower Bollinger Band, 23.6% fib, 55-day moving average. So it's possible we could bounce from here. We're not particularly oversold. I'm not sure if I would risk a long position, but certainly we could bounce from here. What I would like to see is a move up to 111.20, 111.30, and I would get short here with a stop above the 200-day moving average, which is at 111.44. So you could sell it around 111.20.30, stop at 111.50. That risk reward seems worth it, because if we do reject this, we should be back down here at around the 111.50, 111.40 area for profit taking. Sorry, 110.50, 110.40, but you know what I mean. I just want to add to that, for obvious reasons, if we break 110.30, that would be quite a significant sell signal. There really isn't a lot on the downside. So a lot to support the downside is what I mean. On the weekly chart, we've already broken the two-week lows down at 110.77, and we've also broken the 100-week moving average at 110.80. So yeah, a break below 110.30 would break the 3-week low. And I really do think that would be quite a significant sell signal. We could drop quite a long way. Note how we're quite overbought on the weekly chart. The euro versus the US dollar. Right, we've seen the dollar index chart, which is at a critical support level and has bounced. The euro looks quite strong against the dollar. So we held the 61.8% fib at 111.86 at the beginning of the month. We got down as far as 111.74 in March. So that's a good sign. We're now through the 200-week moving average, which was at 113.35.40. So we've managed to get through that this week. It held perfectly last week, of course, as you can see on that chart. Now, every trendline resistance that I've put on there, we have broken through, and we're now using this one as support. This one, which goes back to September. So it's a decent enough support level, a decent enough trend line. You know what I mean is it goes back far enough for it to be significant. I'm going to take that other one out. So right now it does look positive for the euro versus the US dollar. I'm slightly hesitant because I don't see the US dollar index breaking down yet, and I'm wondering if that can have a strong bounce today, or a decent bounce today. So slightly confused on that, but if you take the euro dollar chart alone, it does look pretty positive. I haven't been writing reports on the pound versus the dollar cable because I don't understand the politics, and I don't want to get caught on some crazy Brexit announcement move. We've seen too many of those already. Okay, we do have resistance. If you do want to trade this, we do have resistance from the trend line, which goes back to September last year at around 133.55.60. Obviously, we'll need a break above the March high at 133.83 for some sort of bullish signal. At the moment, the 500-day moving average seems to be having an impact. That's around 132.15.20. If we hold below there, that would be more negative. You can see how we spiked down there and bounced off it. But we collapsed yesterday, and now we bounced back to it. So I wonder if that might be resistance. We've got a little bit of fib support around 131.60, which kind of held yesterday, although we spiked down to 131.43. If we continue low, we've got this trend line coming in at around 130.70.60 with the 55-day moving average at around the same area. So I guess that would be support. We've got the lower Bollinger Band Well, that's quite a lot lower actually. That comes in around the 38.2% fib at around 130.20. Now, those are the levels to look for. I've no idea what to do with it.